Howdy, welcome back to another installment of our video series on the economic and legal considerations for hemp production in Texas. I'm Stephen Klose, and this is part 2 of our crop insurance section, and specifically we're going to be digging into the details of multi-peril crop insurance. Multi-peril crop insurance is the most traditional product delivered through the USDA Risk Management Agency. For other commodities, this is a product that's been around for 40 plus years, and you will purchase and work through a local crop insurance agent to buy multi-peril hemp pilot insurance. It is a yield coverage only policy, and so you're guaranteeing a specific amount of yield against insurable losses. And there are specifically is limited in terms of availability where you can purchase it. So the red counties shown on the slide here are where the pilot program is available in Texas. In addition to location availability, there are specific requirements. So we talked earlier in the overview video about the general restrictions for all of our programs, being that basically you have to be doing things in a legal fashion and working with under a process or contract. In addition to that, for the hemp pilot program, you have to have a minimum 1-year history producing the crop, and you have to be producing at least 5 acres of hemp if you are producing for CBD, and if you are producing for grain or fiber, then the limit is 20 acres. So the way that the specifics of the hemp insurance product works is the first thing you have to do is establish your historical yield. So in the crop insurance world, that's going to be called an approved yield. And your approved yield is unique to you, and in fact it's unique to the location or the farm on which you intend to plant the crop. In the simplest of settings, the approved yield would be the actual production history or the average of a producer's historical yields if you have more than 4 years of history. If you have less than 4 years of history, then there's a formula for they will still average 4 numbers to come up with an approved yield, but you are required to, by formula, substitute transitional yields, or for short they're referred to as county T yields. And what will most likely, I'm not going to go over all of those, what will most likely be the case for hemp production is if you're even eligible, you have 1 year of history. And so the way that would work is you have 3 substitute yields, each of which is 80% of the county T yield, and you would average those 3 numbers with your 1 experience to come up with your approved yield. So a specific example there, if you produced hemp for fiber, this would be this example, and you had a 678 pound yield last year, and you were in Wichita County, the T yield for hemp fiber in Wichita is 551 pounds. So that would be the calculation then for your approved yield. And yes, I picked 678 so that we would come out with around 500 pound approved yield. So then how does the coverage level work? So you have your guaranteed yield then depends on your coverage level choice. You have 6 different choices ranging from 50% to 75% coverage. So for example, if you chose 75% coverage of your approved 500 pound yield, you would be selecting a 370 pound guarantee. And then ranging down to 50%, then you would be choosing a 250 pound guarantee. So then what would you have to pay in terms of premium to purchase those different levels of insurance? And so if you look across the board there, the total premium starts at a little under $750 and goes up to a little over $1,350. But we mentioned earlier that most of these products come at a subsidized rate, and you can see there the subsidy percentages. So at the lowest level, 50%, the total premium might be $747, but you pay 33% of that. So the farmer premium is $246 an acre. And those premium subsidy rates then gradually decline as you increase your level of coverage. So not only do the premiums go up in total, but your portion of that total premium goes up as a fraction. But still, this gives you an idea of what premiums would cost for dryland hemp for fiber production, ranging from $250 an acre to a little over $6 an acre for those levels of coverage. And of course, if you're producing other types of products, then premiums are going to be highly dependent on the value of the yield that you are guaranteeing. So then if you have a yield loss, at what price will you be compensated for that loss? Will you be paid for those yield losses? Each spring, USDA and RMA releases their announced prices for all of their insurance products, and for hemp, you have those in front of you. Hemp for fiber is 8 cents a pound for 2021. For grain is 55 cents a pound, and if you're growing hemp for CBD, it depends on your production practice, whether it's direct seeded or transplanted, and whether you're using the whole plant or just the flower, and you can see those rates there on the slide. These change every year, and it depends on the market outlook and the current situation at the time. So then finally, indemnities are simply a matter of to what extent did your actual yield fall below your guaranteed yield, and then your indemnity is that yield loss, if there is a loss, multiplied by the announced price, multiplied by the acres that you planted and insured. Again, kind of review of some of the other considerations as we went through some of those numbers. You probably realize that the yield levels that you can guarantee and the price levels might be lower relative to your expectations. And some of this is due to lack of history, having to substitute T yields and that sort of thing. And so we tell people don't plan on being able to insure a profit or lock in a profit. You want to make sure you know your cost of production, and treat this as a way to kind of offset those really big disaster situations. Understand the types of losses that are covered, specifically losses that are not covered. As we said before, insurance will not cover a hot crop or THC testing too high. There are other situations where there are certain practices that are required of you, and you can get yourself into a situation where you might have caused a loss, and based on the fine print, those might not be covered as well. So you want to be sure you dig into that and know what those are. Specific deadlines associated with multi-peril crop insurance, sales closing dates, and dates by which you need to plant the crop. And so you want to check with your crop insurance agent about what those dates are. Again, as before, you want to ask about beginning farmer provisions. Those might afford you an opportunity to bump up your approved yields and get higher levels of coverage, or save you some fees or lower your premiums. And if you do have a loss, or if you don't have a loss, let's start with the bottom part there, is you want to be sure and document everything so that you can verify what you've done and have proof that you indeed had a crop. Don't destroy that crop if you have a loss. Don't do anything with it. Don't start over and replant until you've talked to your agent about exactly what your options are. And there are time windows, 72 hours specifically, that you are required to file a notice from the time that you know you have a loss. Finally, some resources that are available for you. If you look up USDA RMA, that will get you to the RMA landing page for crop insurance. And some good tools there. If you look at the menu bar, you can find ways to find your local crop insurance agents, estimate premiums, and look at those price discoveries, and find whether or not your county is eligible, and look at some specific substitution yields and dates, etc. And then finally, if you want to know more about USDA and RMA products in general for hemp, there's lots of good press releases and fact sheets and frequently asked questions under the topics menu if you'll select hemp. That's all I have on multi-peril crop insurance. Again, enjoy the opportunity to be with you. Thank you for watching. If you have any questions, please email me. My email is there on the slide. I'd be glad to answer any questions you might have. If you would take a minute to scan the QR code that will come up next and take the survey to let us know, give us some feedback on the videos. This is really helpful, in particular for our sponsor, the Southern Extension Risk Management Education Center, to give them some good feedback in terms of the education that we're doing. And we appreciate that feedback as well, so that we can better our programs.